Anastasia, what part of the market do you want to be exposed to, given that backdrop Mike laid out? The reopening stocks like airlines or more defensive places as we look to some worrisome headlines about the virus cases?
Yeah, I think there was a time to be exposed to the reopening stocks, and that time may now be, for the time being, in the rearview mirror. It was clear that mid-May, when we were looking at the reopening sentiment, it was very much was picking up. The momentum on reopening was picking up. So it makes sense that things like hotels and airlines and consumer services were picking up as well. So that played out very well in the outperformance of the so-called underperformers. But when you think about the situation that we have now there's actually quite a bit of optimism on the reopening front. And unfortunately, the reality on the ground is starting to look a little bit different. When we think about the virus, it is pretty clear that it's not just going to fizzle out. And it's also pretty clear, unfortunately, that we have not yet succeeded at containing it, at least not nationally and certainly not globally. So because of that, I think some of the momentum behind the underperformers is going to fade. And so I would be rotating out of the hotels and airlines and consumer services. And I would be looking to re-enter some of the sectors that we like biotech, like technology. So I think that's really going to be the space to think about for the second half of the year. And the other thing I would say is the consumer is actually on net pretty strong here. Personal savings rate is high. Unemployment rate is starting to come down. So what we really have to think about is, what is the new normal going to look like? And what is the new normal spending basket going to look like? So I will say there's been some step changes in how we're going to spend as consumers. And a lot of those step changes are digital, they're online. Mm-hmm. And so even if we turn up at restaurants, I still think that those digital spending patterns are here to stay and will be at higher levels than they were pre-COVID.
We'll get to that a little more in just a bit. Let's get to Bob Bassani, though, for a look at how today's quadruple witching and S&P rebalancing is impacting trading volumes and volatility. Bob, what does it all mean?
And of course, that quadruple witch is the quarterly expiration of stock and index options and stock and index futures. 4 things happening, a lot of volume, typically the biggest volume days of the year, these 4 days. And also there's an S&P rebalancing. So some stocks are coming out of the S&P as well. Here's 3 big names no longer going to be in the S&P after the close today. Harley-Davidson and Nordstrom and Alliance Data, all coming out of the S&P 500. A few of the others going in there, 3 others going in. But those are big, famous names. They've just had smaller market caps over the last couple of years. We're getting a rebalancing. Some companies are floating more stock, and they're so increasing the weight in the S&P 500. Today, increasing the weight at the close. Amazon, Salesforce, Morgan Stanley, and Edison. That's, of course, a utility. Again, they're floating more shares, increasing their weight. A number of companies have continued to buy back shares, though. The buyback story is not dead. Apple's continuing to buy back shares. Alphabet, Microsoft is buying back shares. And so have some of the earlier banks earlier in the first quarter buying back stock, like J.P. Morgan and Bank of America. They're going to see their weightings reduced in the S&P 500. Guys, all of this happens right at the close, and normally a lot of volume. Keep an eye on that. Back to you.
All right, Bob. Thank you. Mike Santoli, anything important for investors to take away here as far as the rebalancing and what it might mean for them?
In terms of the weightings, I mean, the way Bob laid it out, you kind of want to know your bet if you're owning the index, and usually it is relative to exactly what the float changes are. But I will say mechanically, with the expiration going on right now, you have the S&P 500 just kind of sticking at that around that 3,100 area. And that's something that just sort of often happens around these round numbers with those clusters of expiring options and futures. But the other pattern has been the week after the June expiration has on net been relatively weak. So that's another one of these just sort of ebb and flow type indicators. It doesn't mean next week has to be weak, but it's just all else being equal. It has sometimes created some pressure when you have that spillover after the expiration.